Finance Conference Canton Schwyz, presented by the following main sponsors: UBS, Interaction, Swiss Life Asset Managers, Ernst & Young, Drooms, Novus Partners, and the following co-sponsors: Schweizer Kantonalbank, Wirtschaftsförderung Höfe, Matic Suter & Partner, Business Network Club Zürichsee, Marketing Business Center, a company of Regus Group, Etzel Real Estate.
Yeah. Hello and welcome back. I think we're all a bit naughty, we're not keeping to time, so we'll try and do our best to still enjoy the speakers and if we can do a few Q&As. But without further ado, we're going to have a Swiss insurer's approach to investing in alternative investments. So I'm sure this will be very interesting to all the asset managers in the room. We welcome Gisela Jaeggi. She's from, and I think this is going to be a challenge for me, but the Schweizerische Mobiliar asset management company. Apologies for that. She's the head of alternative investments. She was the head of alternative investments previously at Swiss Mobiliar Asset Management, responsible for all asset classes covering hedge funds, private equity, private debt, and commodities. I think her insights will be immensely useful. Prior to working in that lovely place, she was at the SBB Pension Fund in Bern and director of UBS Wealth Management. So again, a great deal of practical expertise. Let's welcome her together. Thank you.
Thanks for this very kind introduction. I don't want to give you an overall, I don't want to spend a lot of time introducing myself additionally, but what I would like to do today is really show you how we at Mobiliar have tackled alternative investments, how we have implemented alternative investments, and what we plan to do in the future. I'll also talk about opportunities and threats that we see in the industry, but to start with, I would like to show you who Mobiliar is. I'm sure you have come across these funny ads before. They've been running for 15 years now. They don't need to be translated, and they have won a number of very attractive awards in the marketing industry here in Switzerland. But Mobiliar is not only about funny advertisements. It's actually 1.6 million clients here in Switzerland. It's every third household. And we are organized as a cooperative. That means if we are successful, we are reducing our, not investors' fee, but insurers' fee, and return certain money to our clients. What is also important to know about us is we are collecting premiums of about 3.3 billion Swiss francs, and we are managing a total of 17 billion Swiss francs. We have a very high solvency and a very high asset, or a very solid asset base, and that definitely helps us when talking about alternative investments. You have to imagine, as a cooperative structure, we don't really have access to the capital markets, so we have to be very careful with our clients' money and investors' money, and this has helped us also in setting up alternative investments. I don't want to bore you with history, but still would like to take you back to 2008. You remember the world was on the edge. Everyone was doing a reality check within their portfolios. We did the same. We thought we would come across mainly bonds, shares, and not much else. But this wasn't the case. We also came across private equity investments, being it in convertible bonds and listed private equity. And we also came across hedge funds structured with mortgage-backed securities underlyings. I don't have to tell you how they have reacted, and we have reacted. Everything was rather illiquid, and that was just the least of our problems. But we did not shy away from still believing that the industry is interesting and alternative investments belong into a diversified portfolio. So we prepared ourselves. We gave us a lot of time. We wanted to be transparent. We wanted to have everyone on board. The stakeholders had to understand what we want to achieve with exactly this asset class. We did a lot of education. We've educated from the employee up to the management level, to the board. We did a lot of one-to-ones and brown bag lunches and everything. So we spoke more about risks than returns, and we wanted everyone to understand the asset class as well as the long-term investment horizon. We wanted to build up trust, and we didn't want to put our good reputation that we had in the past at risk with doing something we didn't know what we were doing. Then it was important to us, we wanted to own the structure that we wanted to invest to. We didn't want to be at other investors' mercy, or we didn't want our funds to be the ATM for other investors' decisions. And we wanted to have the quality stamp of the FINMA. We have received the FINMA approval to account all these asset classes to the tied assets in our bookkeeping. And last but not least, we wanted to have the brain power, manpower. Actually, in our case, it was more the women power, as we are a female team. No quota women, though. We decided about core principles. We are an insurance company, long-lasting, and obviously, we have decided that safety comes before returns. We also didn't want any short-term thinking. We made our board understanding that you can't really leave a private equity investment within months or even years. So everyone had to be aware that we are married to a manager on the private equity side for the next 10 to 15 years. And we are using alternative investments to diversify the risk of the overall Mobiliar portfolio. We want to optimize the risk-return profile, and we want to reduce drawdowns, this especially with certain hedge fund strategies. But we also made sure that everyone is aware alternative investments are definitely work-intensive, and you know, Swiss insurance companies, they have a lot of bond investments. It's definitely nothing to steer duration in a large bond portfolio. Now, what have we approved, or what has the board approved? We have allocations of 1% in hedge funds, 2% in private equity, one being Swiss private equity, and I'll talk about that later on. We have 1% in hedge funds, in commodities, sorry, and as I have said before, everything was approved by the FINMA to be accountable within the tied assets. Now that we have started implementing everything, we were searching for the correct or the right platform for us. I've mentioned before, we wanted to be independent from other investors' decision. We wanted to run our own company or our own structure. We wanted to be in the driving seat and therefore chose a Luxembourg structure, a SICAV-SIF platform that we own and manage ourselves. It's easy for us to segregate life and non-life assets within this structure, and again, we are independent from other investors' decisions. The structure is very scalable, and we are currently in the process of expanding the structure, as we have started off with hedge funds so far, and we have obviously tailor-made portfolios underneath with the asset allocation that we have defined ourselves. But also here, it is work-intensive, and it shouldn't be underestimated how a lot of maintenance is coming with it. As I said before, we've started with hedge funds. We have set up the portfolio in the way to diversify the overall portfolio of Mobiliar, and in terms of risk diversification, and to minimize the drawdowns also of the overall portfolio. We have set up 3 tailor-made portfolios, one of them being an equity hedge portfolio. It has a relatively low net exposure, as we already have equities in our portfolio through direct equities, but also convertibles and real estate equities. We have a CTA portfolio. It's 85 to 90% CTAs and 10% global macro to diversify or to minimize the drawdown risk. And we have a global macro enhanced portfolio, is what we call it. We have in this portfolio, and I believe that's the most interesting one, because it has 50% in global macro and 50% in what we call enhanced strategies. That means the manager has really the discretion to either put other global macro strategies into it or strategies that he believes are good opportunities in the current environment. We were able to set up long-term investments with the managers. We were able to negotiate attractive fees exactly with this long-term investment horizon. And we have put a performance fee model into place that we believe is state-of-the-art, as there is always a certain amount of money at risk of the performance fee pool. On the private equity side, we currently have a structured product. It's a convertible bond. It was bought as a bond because it has a coupon and a capital guarantee. We are in the process of restructuring that portfolio at the moment, as we want to use it as a global portfolio. And remember, we have a 1% allocation to Swiss private equity. And when I heard about that, I was like, ooh, okay, how are we going to do that? So I was pretty happy when we came across a Swiss Clean Energy Fund that we have made a commitment to. And this company or this fund is investing into Swiss Clean Energy project, and like power plants, water, solar, and so on. And the good thing about that is, as an insurance company, we have a technical group. All these people have been working on power plants. They do some technical analysis for us in that portfolio. And we have a very good flow between them and ourselves in terms of information. Commodities. We have 8 tons of physical gold. That was bought in 2009 after the financial crisis, and it's not to be touched. We have it as a hedge. We would use it in a disastrous situation to restart the company. Obviously, we were the heroes for the last 3 years since we had it, and we lost quite a bit since the beginning of the year, but still the board has decided to not touch it. We also have 2 tons of physical gold additionally that are managed, that we are trading on, that we are writing puts on. When I have received the invitation to this presentation, this was probably in May, and until May, you remember, hedge fund performance was pretty good, year to date, so I promised to show you performance charts. In the meantime, performance doesn't look as good anymore, especially when you have 40% CTAs in your portfolio, and we started this portfolio at the beginning of 2012, and we have not earned $1 with it in the meantime, which I think is a pity when you look at the markets, the equity markets, that have, for example, MSCI World is up 31% since then. SMI, the Swiss Market Index, is up 37% in the meantime. So it's going to be difficult to sell our board that we would like to increase the asset the allocation to hedge funds. But still, we have done a lot of analytics. We do believe we have the correct asset allocation with such a high allocation to CTAs. We do believe we have the right managers, and we do believe we are invested into the right single managers, and we are not changing anything for the time being. Now, what do we do in the future? We are currently in the process of expanding that Luxembourg structure that we have by adding private equity, for example. We want to add there a global portfolio, diversified, most probably with 3 managers that are managing tailor-made accounts and are working specifically on a certain region. We also want to add commodities, and knowing my hedge fund background, you can imagine that the concept I was working on will end up, or has actually ended up in a long-short commodities portfolio, so we'll plan to do something on the long-short commodities side there. I would also like to tackle a couple of challenges that I see in the markets, or actually in the alternative investment industries. We've seen it before today, regulations. I would also like to mention that it's not only on the single manager level that regulations are kind of painful, it's also on the investor level. I'll give you an example. Our strategy, or our Luxembourg structure, was starting on January 1st, 2012, and a couple months into life of the structure, we've received notice from the CSSF that we have to put a risk management report into place within a couple of weeks, and that need to be sent regularly to the CSSF. Obviously, we do have risk management and we do have reports, but obviously not quite the reports that they were asking for. So it took a couple lawyers and a couple risk managers to put everything together, and we have to report that since then. So this is just a small example, but I think it shows where the industry is going. Then I've mentioned it before, it's probably less about private equity, but definitely about hedge funds. Hedge funds have not really performed very well over the last 3 years. Luke has shown figures since 2000, and they had a good run between 2000 and 2009, but the last couple of years were really difficult, and this makes it difficult for us as investors to continuously sell hedge funds and alternative investments also to our board and our management. And then I'm sure you're as tired as I am of faces like this, being it Bernie Madoff, being it Roch, being it talks about SAC and Cohen. I wish it would disappear because the reputation risk is really big in the industry, and it doesn't help all these news, again, to sell the board to have higher allocations to alternative investments. But still, I think there are a lot of opportunities, one of them being that the industry has grown up. Not only private equity and commodities, but definitely hedge funds have grown up. They do not promise any more absolute returns, that they have realized they cannot really provide absolute returns, but realized returns. These days, they are also talking about different things, and I would actually like to also give you an example of the flip side of growing up. When I've started in the hedge fund industry 15 years ago, it was a pleasure to meet a new manager. You know, they were just telling you everything. They were talking just straight from the heart, and it was an adventure. If you talk to a manager, a new starting manager these days, they are so polished, they are not the raw diamonds anymore, and they know exactly what to tell you. So I think that's the flip side of the growing up. Then transparency and accessibility. I believe transparency has increased a lot. I don't want the manager to show me every short position that they have on, but I want to understand how he sets up the shorts, how he manages the risks on the long and on the short side. And I think things there have increased a lot. Then fees. Fees have come down dramatically. We were able to negotiate very interesting fees, as I said, the performance fee model as well. And I have a strong belief that it's not really a good thing to squeeze every dollar out of the manager. I believe the manager needs to be treated well and fair, otherwise he doesn't really take enough care of your portfolio. So it should be fair treatment for the manager, but also for me as an investor who takes a certain risk. So looking ahead, I think the industry is moving into a single pot fashion, is what I call it. All those investors who have a certain size like we do, I'm sure will ask for more managed accounts, tailor-made portfolios, and move away from the fund-of-fund business. I also believe that there are more managers really have to close down. We've seen it on the private equity side as they have more problems raising money. We see it on the hedge fund side. Obviously, the money is going to bigger funds. But I do believe we see a lot of managers still having to shut down. But I think we are in an industry where people are very, very smart, or there are people that are very, very smart. And I think if we do our work and search for the needle in the haystack and are not tired or lazy to do the due diligence and find exactly these brilliant people, then we will be rewarded with good returns. So what about Mobiliar? Can we lean back? No, not really. I wish we could. But we still have a couple mountains to climb, and there might be a couple shadows, or not shadows, clouds over them, but I do still believe alternative investments belong to a diversified portfolio, and they do, and the future is bright for exactly that industry if we do search for the right people. With this, I would like to close, and from what I heard, we don't have any questions.
Thank you very much, Gisela. I'm sure that if you've got any questions, you can ask them direct to Gisela just after. I hope you're staying a little bit with us, a tiny bit. And thank you very much for that talk.
Sure.
I think
Thank
you... Yeah, there you go.